Hello, Oracles. Well, Tesla came out with their deliveries and production today, and the stock fell 3.5%. So, what happened with the numbers? Why did we fall 3.5%? Well, Tesla came in at 463,000 deliveries, which is slightly beating expectations of the 462,000. So, you would think that the stock would go up, right? Well, not necessarily, because don't forget, there are whisper numbers out there, some stock getting priced into, hey, we think that they're actually going to be doing a little bit more, but they didn't actually hit those numbers. And then, as we discussed last night, all the analysts that are out there are taking the specific numbers that Tesla gave us, they put them into their valuation models, and then they kind of adjusted numbers from there. So some people were high, some people were low, and consensus estimate was 462. So again, right in that line, but because of that, the stock ends up coming down 3.5% because they were expecting a little bit more secretly behind the scenes, and that's what we ended up getting. So, what happens from here? Again, I truly don't know what's going to happen from here, but most likely we're going to maybe see a little bit of a rebound and maybe run up into that robotaxi event, and then we'll get a sell off at that point. Historically, that's what happened. Is that what's going to happen this time? Who knows? We will find out when that ends up happening, and that's going to happen on October 10th. So, what can we expect for Q4? Again, we don't know, but historically, Q4 is the best quarter for Tesla. They're trying to push for those end of the year numbers, trying to get everything pushed out as much as they can, clearing out the inventory. And this time around, we did see that they produced more than they ended up delivering. So, they had 472,000 produced. So, they did build up a little bit of that inventory. So, they'll have a little bit more carried over into Q4 to be able to push and sell. We'll see what happens. Now, Troy Teslick had put out the fact that in order for Tesla to reach the same year-over-year numbers for the entire year, they're going to have to deliver about 514,000 vehicles in Q4. That would be the first time they've ever been over 500,000 vehicles in one quarter, as we had discussed last night. So are they able to do this? Well, that would mean that they would need to bump these numbers up by 11.2%. Historically, they have done more than that, but those numbers have come down drastically over the years. Last year, their Q4 beat Q3 by 11.4%, but prior to that, the percentages were much higher, over 20 and 30%. So with those numbers declining as they have been, is Tesla going to be able to push up and do an 11.2% increase quarter over quarter in Q4? Time will tell, but we just have to wait and see what's going to happen. If the growth that we have seen this year is going to tell us anything, we will probably end up falling short of that. So again, we just need to wait and see what happens at the end of the year. If nothing else, Tesla's going to most likely come in around flat, maybe missing a little bit on a year over year basis. It's not going to look good, but if they're showing that they are rebounding from this, so maybe going into 2025, if they can show that they're going to do a 10 or 15, maybe 20% growth, that's going to give the market a good feeling inside and say, all right, Tesla is on the rebound. The worst is behind us. Now we can look forward to growth again, because this last year and a half or so has not been growth at all. It's been the complete opposite. And for a growth company, not showing growth, even retracing their steps, is not what you want to see. So again, that's what we're going to look forward to in Q4 and 2025. So what happens from here? I truly don't know what's going to happen with the stock price. Again, I have my expectations that we'll see a little rebound from this, running up into the robotaxi event, selling off after the robotaxi event, and then we just wait until earnings and see what happens there when Tesla comes out with their numbers. So that's my take on Tesla. Again, I don't think this is going to affect them long term. I think the long-term ramifications are going to be more about the compact car when that comes out, if it's going to end up coming out next year, and if they are actually going to get FSD solved to be able to put them into robotaxis within the next couple of years. Those are the two bigger pieces from a long-term investment standpoint. I think from an automotive maker standpoint, they're going to grow perfectly fine, but we might not see the crazy numbers when it comes to the stock price if Tesla's only going to be at the point where they're just producing vehicles and not doing other things. Now, one thing that they did disclose this time around when it came to deliveries and production was energy deployed. So the energy deployed numbers were very nice to see. So it's nice to see them putting it out, because as we've discussed in the past, energy is going to be a huge piece of Tesla's business going forward as well, that could eventually eclipse the automotive side of their business. When that's going to happen, I don't know, but we have seen some significant growth in energy over the last few quarters and the last year. So it'll be nice to see that come out in the Q3 numbers, and we'll see where Tesla has grown with that as well. And we'll see how it's starting to affect the bottom line as well, because we have been seeing that those numbers are adding a little bit of extra padding to that bottom line. So if that is continuing to grow, that could be a nice little kind of buffer when it comes to the automotive side of things, as those are still kind of stagnant at the moment. All right, now to slide away from Tesla a little bit, because, I do more investing than just Tesla. On the dividend side of things, I did make a move today with my portfolio. I'm not really one to sell much, but again, I've always recommended to you guys have your portfolio, but always constantly do your due diligence on the stocks and ETFs that you own to see if there's any changes that you want to make sure the fundamentals are still strong. So for me, when it comes down to some of the ETFs, I have noticed that QQQY and formerly known as JEPY, now WDTE, are now giving weekly dividend payouts. That is awesome. I'm extremely excited about that. And YMAX is also doing weekly payouts. So this here could lead to more NAV erosion that they've already seen. I'm going to kind of monitor that as it goes. But having those weekly payouts is going to be nice because that means I'm going to have more cash coming in frequently, like a paycheck almost, to be able to invest in other places because I'm not dripping this money into those ETFs. I'm taking that money and I'm putting it elsewhere. So having that extra money coming in will be really nice for me to be able to add to my portfolio and add to other stocks. If it has NAV erosion that's going too fast, or I think that it's not going to be a smart play in the long run, I will end up dumping those. But I also hit a point today where my stable income ETFs and stocks are now paying out more on a monthly basis than those high yield dividend plays like the YMAX, Coney, JEPY, now WTTE, and QQQY. So that's kind of what I wanted to do is making sure that my other plays over time are going to pay out more than those. And then eventually I'll just dump them all together because I won't need them and I could just free up that cash and put it elsewhere. So that is kind of my play right now with these. And then the other big move that I made was I sold off a portion of my Oracle stock. Now it was hard for me to do because it's my namesake is Oracle. And the reason I bought it was because I thought it was a great AI play. And, for me, it was like, hey, I kind of feel it with Oracle. Let me buy some Oracle. And I did. And I bought it at a great price, about $100. So I'm up over 50% on this stock. And their balance sheet is actually kind of terrible. So unless they manage to come in with some revolutionary AI stuff that is going to bring in massive revenue to offset their balance sheet and extremely high debt, I really don't want to hold them long term, especially if we're going to get into a potential recession. Now, we'll get into that recession stuff in a minute because of the jobs report we got out today. But when it comes to Oracle, I'm like, you know what? I have plenty of other stocks. I have Oracle in a bunch of the ETFs that I own already. I have a lot of exposure to tech and AI. So I really don't need this extra one. Being up 50%, I will take those gains. So what I did was I had only 3.5 shares because I'm still growing that portion of my portfolio. I sold off half of a share from my SoFi account, cleaned out that entirely, freed that money up, and then I put in a 5% stop loss in for the rest of it. And it's only the other 3 shares, but I've got that stop loss in there and we'll see what happens. It ended up going up today, which is great because that means that when it does trigger the sell off, I will sell off at a higher price. But I can take that money and put it elsewhere as well. But I'm allowing the market to do its thing. So if it does want to continue running, their annual shareholder meeting is coming up in November. So if it does end up running for some freak reason, hey, I'll make even more money on this and then we'll just ride it out from here. But I just thought it was a wise play for me to free up that cash, have that on the sidelines, and be able to distribute in other places that I do feel more comfortable with in companies that have a much better balance sheet. And so now moving on to the jobs report, again, this is one of the focuses that we have right now where inflation is basically squashed. Now we have the port strike going on. Is that going to cause inflation? Only time will tell on that one. I don't think it will, but we have to see how long this is going to last. But unemployment is going to be more important. But the ADP jobs report came out today showing 143,000 job postings out there. So this is a very good sign because that beat expectations of 122,000. So that there is one of those little signals that we pay attention to and say, well, maybe the Fed will get us to this soft landing. Now, I know I've been beating the drum about having a recession coming because all these indicators that we've been seeing heading in that direction, this is a good bullish one that is going to point that maybe the soft landing will happen. Again, still a lot of data that we have to have coming in. The actual unemployment numbers still need to come out. A lot of things that we need to pay attention to as far as the data goes when unemployment is coming out to make sure we're staying in this consistent trend and moving back upward. But this is a first piece of that puzzle. We'll see if this ends up continuing, because if it does end up continuing, then the market may just keep on rallying from here, and maybe we don't end up getting that recession. And that means that perhaps the bottom is already worked in, and maybe 2022 was that worst case scenario where the bottom of the market was. And when we get the news about a recession, we always get we were in a recession, but we're coming out of it now. Or, we've been in a recession for a while and now we're kind of at the bottom of this recession. Or sometimes we can say, hey, the bottom of the market was 6 months ago and we missed it. we're never going to know exactly when the bottom of the market is until months after it's already been there, maybe even years after we've been there. So again, this is why dollar cost averaging historically is the best way to invest in the market for the most gains in the long run. And that's why for me, I've got my whole entire portfolio strategy set up where I just see where the market is telling me to buy, I buy there. When my portfolio tells me I have cash to spend, I'll know where to spend that money. That's just how I do it with my portfolio. There's a lot of different strategies out there. I know mine is not the best. I know mine does have some negative aspects to it, and I'm missing some pieces to it. But this is the strategy that works for me. And I'm growing my portfolio at a rate that I'm very comfortable with. And I just make some tweaks and adjustments here and there. And so looking at the snapshot of my portfolio, and again, all members and patrons get full access to my spreadsheets here. You guys can see every move I make every single minute. It's all completely live for everyone to see. And so you can see here, I'm bringing in, I have an 8.5% yield and an almost 10% yield on cost when it comes to my dividends. I'm pulling in between dividends and interest almost $400 a month. My all-time total return is at 38.6%. And this tracks back to 2019. So you can see here, my first year, I was not doing very well. About $1,100 loss. Hey, I was just learning how to play in the stock market. That was basically the fee I paid to enter to learn how to play the stock market. Then I made $22. Hey, a gain's a gain. Then I made $192. And then 2022, pretty much everybody lost, but I only lost $200. Then $2,700 last year, and I'm already up $2,000 this year with 1 quarter or 3 months left to go. So again, it's always about growing your portfolio, growing those returns, growing your net worth. This is what this game is all about. So we're playing this for that long-term investment strategy. And as you can see from my portfolio, I have been doing that. I went through that learning cycle, and now I'm working on getting myself to more consistent growth over time. And that's what I've been seeing. My stress is down significantly because of the way I'm doing this now. I'm not worrying about minute to minute, day to day prices at all. I follow my spreadsheet, do my thing, much more successful as this is going right now. And again, in about 5 years, I'm up about 40%. And that includes a massive loss in the first year and even a loss in 2022. And I'm still up almost 40%. So pretty happy about all that, pretty happy about the moves I'm making. And again, if this is something you guys are interested in seeing and following, go ahead and check that link down below for either members or patrons. And you guys can see my spreadsheet at all times. And again, I am going to be getting it out to the second tier level when it comes to members and patrons, a downloadable version of this. And you guys might actually be able to take it. I don't fully know how Google Sheets work, but hey, maybe you guys can download it right now as it is. But I do have a cleaner version that I've taken a lot of the numbers and unnecessary information out of for you guys to be able to download as well. And you guys can go ahead and take that as well. Again, this is something I want to share with you guys, and I will be working on, and I don't know when it's going to happen. I have no idea how much it's going to cost, trying to turn all of my spreadsheets into an app. So again, this is kind of a pipe dream for me at the moment, but if I can get to that point and make it happen, I have one of the guys I worked with in the past who can do that for me. So just got to have a call with him, figure out the whole logistics behind all of this. Once I get all that figured out, I'll let you guys know, because if we can do it in an app form, way, way better. So that's all I've got for you guys today. Let me know how you feel about the Tesla numbers that came out today. Let me know if you guys made any moves in your portfolios. Let me know the growth that you guys have seen in your portfolios over the last 5 years, if that's something that you track. And we'll see what you guys are doing. If you're growing your portfolios, that's amazing. So let me hear about all your successes down in the comments. Thank you guys so much for watching. I appreciate all of your support. Have a great one.